Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Mark Smithson and CFO Josh Egan of Marks Electrical, a fast-growing online retailer of all things household appliances like tellies, dishwashers, cookers, fridge freezers, etc. So welcome, gents.
You forgot range cookers, Paul.
Forgot what? Sorry, this time?
Range cookers.
Oh, range cookers. Sorry, right. Yeah. Well, anyway, regardless of that, big congrats on the terrific trading update this morning with like-for-like sales up more than 27% to just over £22 million. But before we sort of go through those details, Mark, I don't suppose you could give us a quick overview or just view of the health of the consumer, because a lot of companies have been really struggling in this environment, and not least your competitors like AO World.
Yeah, well, it's a tough market for everyone. It's always tough, but it's been particularly tough, isn't it? It's all about navigating your way, isn't it? The consumers are still spending. We sell products that are distressed purchases. You know, so if your washing machine breaks, you still need a new one. People are a bit, they like to buy the right product now, so they'll do a bit more research on what they're buying. We sell premium products. It's all about having the right data on your website. It's crucial, and that's what we focus on. We've invested heavily in that. So, you know, the customer's savvy. They want the pound of flesh, which you know, rightly so, and they want a great delivery service, you know, and that's what we offer.
Yeah, you certainly seem to be doing that in spades. And just on the actual growth, Josh, what is it? Mainly volume? Is there any price in there? Because I know the whole industry, in fact, the whole world is suffering from chronic inflation, cost inflation. How are you seeing that sort of like push through into you? So basically, the split between sort of price and volume for that 27% increase in turnover.
Yeah, so we haven't seen massive price increases, Paul, in that quarter. We are seeing more price increases being pushed by the manufacturers in January, but not in the previous quarter. So I would say it's a fairly even mix. It's mainly volume that's driving that in the third quarter.
Okay, good. And then Mark, just on the what's the secret sauce on this advertising and promotion strategy? I know you talked about you're going to run some sort of TV campaigns, but
I'll have to shoot you, Paul.
Oh, okay. Well, just give us a quick overview. You said you were going to come to Borsal and start dropping leaflets around people's houses.
Well, I've done that. I've got my bike out, my paper bag. I used to have a big paper round, so posting leaflets. You'll see if you're going through your front door. No, it's all about the harder you work, the luckier you get, isn't it? You know, the more you put in, the more you get out. So that's what we're doing, working very hard in all areas. You think you're working flat out, but you just need to change direction and look at other avenues, don't you? Work a bit harder. Marketing is never easy. It's not an exact science. And all marketeers say they're all experts, but they're all experts in the dark art of marketing.
Well, I mean, just taking me myself as a consumer here. I mean, I look on Trustpilot a lot, and you guys, you had last time I spoke, you had a 4.7 rating on Trustpilot out of 5, which was leading edge, and you've actually increased that. And I just saw one comment coming from a guy called Steve Barnes 19 minutes ago saying, great prices, website and fast professional delivery. Very pleased. I mean, that must be.
Yeah, appreciate that.
But that must be the Trustpilot. There must be quite a good key sort of like.
It's a measurement yardstick for every business, realistically nowadays, isn't it? Or most businesses, I should say, particularly in our industry. But if you've got your own logistics, you're in control of your own destiny. You know, I always say it's a key part of our operation that we've got our own highly trained drivers that will deliver our products to the customer, and that's what it's all about, isn't it? You know, we don't hand the service and the control of our business over to DHL or you know, or somebody like that. It's all done by our own guys, and they go the extra mile. They're all shareholders in the business. That makes a big difference. Your employees, you know, they just work that bit harder, you know, and make the extra effort. That's why our Trustpilot rating is so good. All right, it's a lot easier for us because we're coming from a smaller base, so we can navigate the tricky market. But I think we're doing it pretty well, and we've invested heavily in the logistics.
How come you, just on the marketing, how come you sold so many tellies over Christmas? I would have thought it'd be the opposite, but is it just you've got a very good product setup, people? Because I know you talked about that in your statement.
Yeah, well, TV was an area we were quite weak on, so we've doubled the market share there from a minute base to a double minute base. So no, we're pleased. We're making inroads. It's what it's all about, isn't it? You know, every sector we want to improve in. That's our weakest sector. So it's easy to keep doubling your market share, which is what we intend to do.
Yeah. And Josh, just on the spend, what's the sort of investment? Because I did notice in the first half you said that I think it was your marketing and sales promotion was about 5% of sales. Is it sort of tracking that, or did you pick it up because of Christmas and the festive level?
Yeah, on the marketing side, Paul, it's a little bit higher in the third quarter, and that's, as I said, driven by that competition that we're seeing in the digital marketing space online in November and December, with a lot of competitors, really going for it. We did think that'd tail off in January, but we are seeing, a couple of competitors, naming no names, still really pushing hard online in the month of January so far. So we'll see how it trends out in Q4. But it's a little bit higher. So just trying to be, conscious of cost in the other areas where we can.
But you're still sort of like generating good operating leverage, because I think you did 8% EBITDA in the first half, and you're tracking towards 9%. You say in the statement in the second half. So that means you must be doing it sort of like, well, just by the numbers, more than 9% in the second half.
Yeah, it's been a good start. October, November, particularly good. As I said, that competition ramped up in November, December. So yeah, we're happy with the third quarter margin.
And how are you generating that then? So what's sort of like? Is it just a volume? It's a volume thing, is it? Basically, just generating more overhead coverage, more sort of like contribution to your fixed costs.
Exactly. It's been the peak revenue that we've ever done. It's a record quarter for us. We did invest heavily in the cost base in Q1 and Q2. We haven't added significantly to the overhead base in Q3. So yeah, it's just leverage over the fixed cost base.
Yeah, and then Mark, just on your on your logistics and your supply chain management, obviously, investors are a bit concerned. Well, everybody's concerned a bit. Everybody's been self-isolating because of Omicron and COVID and stuff, particularly on the delivery drivers. If you've got to sort of like install a fridge freezer or something like that in somebody's house, how are you finding this sort of like your next day deliveries? You still sort of like been able to do all of that?
Yeah, no, we're still pushing that, Paul. We're still delivering what we say we're going to do. It's not easy though. We've got 10% went through it with the HR manager this morning. We've got 10% of the workforce off, which is a lot of people, isn't it?
Yeah.
I heard the other day the guy from Iceland, they got 11% of the workforce off, and it is so difficult. And yet you still, people still expect first class service. So treat people the way you wish to be treated. We've always pushed for great service. It's not easy, but you just got to keep working at it, haven't you? Do your best and draft people in, move people from departments and shift people around. And that's what it's all about, isn't it? When times are difficult, you have to make swift changes, and that's what we're good at doing.
So I'm guessing in a couple of weeks we'll be seeing you and Josh in a van, sort of like rolling up your sleeves, will you? Sort of delivering a telly.
Doing it all over Christmas, put a white beards on, and off we went. I've already got the white hair.
And what about stock availability, Mark? Because it seems as though the company has got sort of like best in class availability here, because that's one of the problems that AOL talked about a couple of months ago, that they were just out of stock.
Yeah, well, look, it is a problem for everybody. It's very difficult for them because it's such a huge outfit. So it's a lot easier for us. But we've got a huge warehouse with massive stocks. I've always believed in holding big stocks, Paul. That's what's driven this business.
Yeah.
And an accountant would say, hang on, you've got a bit too much stock. Josh looks at it now and monitors what we're buying. But we've always been used to, we can afford to buy lots of stock. Deals used to come along more often. There's not so many deals now. It's more about actually getting the stock is the key rather than getting a deal on it.
Yeah.
So, but yeah, we've navigated our way through very well, and some lines are harder to get than others, so you have to push harder on the lines you can get.
And Josh, just talking about, can you just talk us through sort of the outlook for the rest of the year in terms of sort of like, you know, what you're looking for in like-for-like sales in Q4, just broadly, and operating leverage? Because I mean, obviously you've got this situation whereby there's a less footfall going through retail centres and retail parks now because obviously of Omicron and people sort of like coming away from that. So can you just talk us through how you're seeing the next sort of 3 months, and then maybe even sort of like just go forward a bit further?
Yeah, so I mean, in the final quarter of the year, so Jan through till March, you know, we are cycling again against a pretty tough comparative from last year. So we'll be pushing for the best growth that we can do. The way that Mark and I think about it is we want sequential performance month on month. We want to just keep doing better. So we'll keep pushing ahead, I would say, in the final quarter, and you know, trying to achieve 20% plus growth levels in that fourth quarter. As we move into the following financial year, obviously it's early days yet to give a prediction, but we'd want to be growing at the kind of 20% level for the next financial year. But we'll obviously give a much clearer set of guidance when we come to around April. We're probably going to do a trading update at the early part of April, Paul.
Right. Okay. So that's straight after the new year. Sorry, after the year end. Yeah. Yeah.
Exactly.
To add to that, sorry, Josh. To add to that, Paul, as well. As we see stock pressure easing somewhat, you know, the motor industries announced that, you know, mid-summer stock should ease a bit. So we'll find that the same in our industry as well. The manufacturers are all alluding towards, you know, June, July time, stock will become a lot easier to get. So the easier the stock becomes to procure, the better for our business, because the more SKUs we can fill and populate on the website, then people buy into our service. So it can only be upside for us.
And just on that, Mark, is there any other sort of like cards you got up your sleeves for new products? Because I mean, obviously you've sort of like pushed the button on the accelerator with the tellies. Are there anything else in there? I mean, obviously range cookers are just another one, but
yeah, well, just the whole set. I mean, we've got such a minute share of the market. Sorry, I've forgotten the words for a minute. So, you know, 1.5% market share of a £5.3 billion market. So we just need to get better at what we're doing. That's what we're looking to do. We don't need to spread our wings too far. We're not going to go into the laptops and phones, not for some time anyway. But there's no need to. There's such a huge market pool. We'll just concentrate on what we're good at.
Yeah. And just so broadly, so it's in about 3 to 5 years. So what is the sort of the ultimate objective? I know you talked about sort of like a market share target. You just go through that one again, just to.
Yeah, 10% market share. So that's what we're looking for. Yeah.
And how easy is it to scale the business? Is that? I mean, if you're doing a sort of, I don't know, is it 80, 90 million of turnover by year end, etc., and that will be like a 1.5% just over, you know, market share.
Well, we think we can get to 180 to 200 million out of this current site. So I don't think we'll outgrow it next year, but we're in talks with the council already and developers in the short to medium term on a new site.
And is it all going to be organic growth to get to that 10%, or are you potentially got some?
We don't need to go and start buying other businesses. We're just going to push on doing what we're doing. You know, it's all about making profit. We're not after world domination overnight, Paul. You know, we want to grow at a nice rate, but something that's sustainable. And that's the key, isn't it? You know, you want to maintain your first-class customer service, improve a Trustpilot rating would be great. Aim for 4.9.
You can't go above 5, Mark.
I don't know. They might put a special level in for us.
Yeah. I don't think I've ever seen Burnley on a 4.9, so 4.8 is pretty good. But you'll definitely be a leading edge if you get to that level.
Well, never say never. It's doable, isn't it? You know, if you just keep treating people the way you wish to be treated, give great service and cut down on your mistakes. When you make a mistake, put your hands up, say sorry. The great thing is we've got our own logistics. We can solve the problem the day after.
Yeah.
And that's what it's about, isn't it?
Okay, brilliant. And so any other news flow coming? You mentioned, Josh, that you've got obviously your trading update in April. Anything else afterwards at all that you might be? Is it the just usual sort of like corporate stuff?
Yeah, we'll do the trading update early April just to give a view on how the end of the year went. Then we'll aim for early June probably for our full year financial results with the profit and the cash flow and so on. So yeah, just the usual corporate results news flow.
Brilliant. Okay, well, thanks very much, gents, and a massive congrats on the on the Q3 numbers. I mean, it absolutely is industry leading and better than anything I've seen. That's for sure so far coming out the post Christmas trading update. So well done there, and look forward in touching the base going forward.
Thank you. So not too bad for beginners then.
No, you're doing pretty well. I think you're past the beginner stage there, Mark.
Okay, all right. Well, I've never had an A star. Do I get one?
Maybe next time.
All right, I'll work hard, and I want an A star next time, Paul.
Yeah, we'll get 5.2 on the Trustpilot. What about that?
Oh, okay,
it's a deal.
I'll have that.
Thanks a lot. Bye.
Thanks, Paul.
Bye. Thanks, Paul. Bye.